Good morning, traders. This is Michael coming to you from GammaEdge on May 1st with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our 3 pillars: sentiment, structure, and trend. Currently looking at our market trend model. This is based on the tick index. You can research that at your favorite investing website. In the short definition of it, it is a measurement of the overall buying versus selling between market participants. If there's more buying versus selling, this bolded CT line, which is our cumulative tick aggregated, will be rising. If there's more selling, it will be going to the downside. As you've seen over the past 3 to 4 days, or followed us anytime on X, we've been posting that the bullish or the bolded white line, which is the CT, has changed to a bullish state from lower left to upper right. And we continue with that state heading into this morning. Our shortest term moving average is here. This is just a overall trend indicator for the market trend model, and we are staying above that as we continue to rise, maintain that bullish state. You'll notice also that we are above this colored ribbon. This is our longer term overall state of buying versus selling in the market. And we're starting to see positive slopes in the red and cyan. What we would look for on the colored ribbon is the red to cross above the cyan, indicating that we may be moving into a more sustained, longer term bullish state or price appreciation in the market. Again, MTM, market trend model, is not predictive. It is just telling us what is occurring in the market on the buying versus selling front. Up here, we do have our breadth indicator, new highs versus new lows. Yesterday, we did see the new lows just barely almost outpace the new highs, but the new highs took over towards the end of the day there. Our institutional indication, this is the filtered cumulative tick of plus 1,000, minus 1,000 buying and selling orders. We were below zero most of the day, but then started to uptick in the afternoon, obviously with the price appreciation also. And then monitoring this bolded white line, which is CT, indicating that market participants were buying more than selling. So we'll continue to watch this day over day. Historically, what can happen is we'll start to see this bolded CT start to flatten out. It may roll over and cross back under these short-term moving averages, indicating some short-term weakness or pullback in the overall market. But then we watch for it to stay above this colored ribbon and come down into the colored ribbon, and then start to look for the opportunity to move back to the upside. So again, we'll continue to watch this day over day to see how market participants are interacting with the overall market in the area of buying versus selling. Moving on to the SPXA, this is our cruise ship, as we like to speak of the options complex of the SPX, and we monitor the SPX options complex because it's the largest and most liquid. The SPXA is actually the monthly or quarterly or monthly expiries. This is institutional positioning and larger market participants. We like to look at this SPXA and split it from the SPXP for kind of a 40,000 foot view of where the larger market participants are positioned. We are still put dominated on the SPXA, but if you followed us again over the past few weeks, you've noticed that this continues to improve. This is the net delta column, indicating that call speculators are starting to increase their overall exposure within the market. We just have this little box of red negative net delta to the upside now, which is in the money puts, and that continues to erode as obviously spot price continues to move up and market participants either continue to take profit, or these in the money puts become out of the money and they're filled in with call speculation. As of now, we are within the overall transition of the SPXA. We're monitoring the 5,500 level. We've talked about that multiple times, that round Livermore number, or just a round number within the overall options complex. And to the upside, 5,600 would be that next area to the upside that we would continue to monitor. So again, the SPXA, even though still put dominated, continues to improve. A small amount of negative net GEX that continues to decrease. So again, as larger market participants are looking for more price appreciation to the upside via call speculation in the SPXA. Moving on to the SPXP, all expiries turned on. As you've noticed over here, obviously the SPXP is a shorter term contracts, as these turn over much more quickly, as these are 0 DTE as well as weekly expiries. Our expected move is quite large today at 1.97%, 110 points. So again, increased volatility as we've been discussing. Call dominated, above and below spot price. So again, watching this negative net delta, or this net delta column continue to change from negative net deltas to positive net deltas, indicates that market participants are speculating or entering call positions. Net OI is green all the way up past obviously 5600, 5650 up here, indicating that out of the money call speculation is alive and well. And we do have just a small amount of in the money puts overhead via these red negative net deltas. But as spot price continues to appreciate and drive those in the money puts out of the money, most likely those will continue to erode and we'll see call speculation to the upside. Conversely, if we do see some retracement, we'd be looking to the downside, this large round Livermore number and large net gradient of net OI here at 17,000 contracts. 5,600, we'd look for that to be supportive, or even down towards the top of transition area around 55.35. Below 5,500, we'd be a little bit more risk off and a little bit more cautionary, as that would lose a significant amount of in the money calls below us and positive delta, and we might be entering a little bit more weaker state. But as of now, we would anticipate us to stay between the 5,500, 5,600, and then look for price appreciation up towards 5,650, and ultimately this round level of 5,700 up here. Again, any pullback in a call dominated in the money call environment below, as long as the MTM maintains its bullish state, is an opportunity to get involved in the market to the upside, as we've been talking about for multiple days on any pullback overall within the market. Moving on to the SPXP, single expiry, 0 DTE for today, expect to move 2%, 116 points. Again, high volatility, so we encourage you to have a risk management plan in place. If you don't, call dominated above and below spot price. So again, we are call dominated with call speculators that continue to enter the overall structure. As of now, the implied open would roughly be around 56.35. Last I checked, it looks like we were losing some of that steam, dropping back down towards this 5600 level. Again, we have a significant amount of in the money calls below us that can dampen price pullback. So we'd look for at least the 5600 level to hold. If we get below 5600, we'd be looking down towards the 5550 area, or even the top of transition, which is very well defined, our GEX and DEX transition down towards 5520, which confluently will be the bottom of DS range down around 5500. If we're below 5500, we would look for some more risk off and be a cautionary stance. But any pullback within this overall structure, even though we're within the DS, which can be highly volatile, would be an opportunity to look to get involved in the environment, or the overall market environment that is call dominated with positive gamma. Again, above 5,600 or above 5,650, we'd most likely look to be long towards the 5,650 level and ultimately towards 5,700. We do have a little bit of negative net delta above us, so that's why it will be important to watch the vol M command intraday. That is how market participants are speculating with the massive volume, and we'll continue to watch that to see if we have positive slopes on the call and put centroids, or how those transition throughout the day. Do they transition a little bit more bullish, or they transition to a state where it looks like we're going to have some sort of consolidation, or they transition to a negative slope state where we could have a possible pullback within the overall structure and environment. All right, moving on to the SPX GEX ratio. I've been talking about this in our pre-market prep really for the past week. We wanted to see the dotted red line continue to move to the upside, even if spot price was staying stagnant or barely moving to the upside. This is a put call ratio. That is a better put call ratio because we include a time component, which is gamma. The red dotted line is just indicating that short-term call dated gamma is outpacing the put dated gamma, which is what you want to see, which is out of the money call speculation or in the money calls continuing to come into the overall structure. And this provides the price the slope to the upside with the dotted red line. Again, as spot price appreciates to the upside, we start capturing that out of the money call delta and gamma, and that can provide a rising red dotted line, which is also our GEX ratio. Historically, when we reach a GEX ratio of around 1.2 to 1.3, we've seen some sort of pullback, but staying above 1 gives us that more call-dominated positive gamma environment that you want to see on any pullback. Below 1, it might be a little bit more cautionary and risk-off for a slight pullback within the overall structure. So we'll continue to watch this day over day to see if we maintain above that important 1 level. And then if we start to see some sort of price appreciation without appreciation in the overall GEX ratio, then that would indicate that possibility stalling or a short-term pullback is on the horizon. This is our EM command. This is basically showing us where the highest sensitivity strikes are. We forced the spot price at 56.31. That was the implied open as of the time of doing this. Even if we pull back down towards that 5600 level, you can see the significant amount of positive gamma within the overall structure. So any pullback down towards this 5600 level could be an opportunity to stay involved in the overall market. And then below 5,600, we'd probably be looking down towards this 55.75 level, or even the 55.50. So we'll obviously watch this intraday. If you remember, this is automated in the automated channels. It runs every 5 minutes and gives you a complete overall update, or you can run the $EM command in Discord intraday. Moving on to the delta balance for the SPXP, we've been speaking of this day over day, that we wanted to see this blue dotted line. This is our delta balance. This is indicating market participants of the delta above and below spot price. So obviously staying at 1 indicates that call speculators are in control. We've separated the planes, left-hand plane, right-hand plane. So right-hand plane would be below spot price. If you're a bull, you want to see it stay above 0. This would be in the money calls, staying involved in the overall market with speculation, or at least holding in the money calls below spot price. And then the red is the left-hand plane, which is above spot price. Flip that around, pause that, remove that. The right-hand plane, again, above spot price, that's out of the money call speculation. Left-hand plane is below spot price. These are in the money calls. You want to see these continue to be maintained within the overall structure. So again, staying delta balance at 1 indicates call speculation is in control if you're a bullish market participant or looking for a bullish state. Moving on to the SPY, we spoke about this, that had improved rapidly ahead of the SPXP. Again, delta balance projected on out in time to stay at the 1 level, so that would indicate that out of the money call speculation or call speculation is maintaining control of the overall environment. And the right-hand plane, again, staying above the right-hand plane staying above 0 indicates out of the money call speculation is staying in the overall market. And then if it continues to the upside, that means out of the money call speculation is moving up. And then the left-hand plane, again, in the money call speculation below spot price, needs to be maintained to dampen or see any pullback in spot price that can have some sort of a supportive type action within the overall structure. Moving on to the SPXP net stat command. This basically tells us where the highest sensitivity strikes are for the day. Out of the money, again, out of the money calls, right-hand plane strike. We spoke about that 5650 to the upside. If we stay above 5600, that would be a likely target to the upside. And to the downside, obviously 5450 is significantly below spot price, but it is in the money call dominated. This will be supportive type action on any pullback. And then our third order Greeks, net, charm, gamma, and vanna around that 5600 level, important round level, and then a third order Greek level, sensitivity level that we've talked about on any pullback that may be an opportunity to get involved in the overall market. The ARCX, again, was just a quick overview of the MTM, continues to the upside. It's isolated by itself. So obviously you want to see this continue to maintain from lower left to upper right if you're a bull. And if you see some sort of stalling or rollover of the market trend model, the bolded CT, into the moving averages, this may be a opportunity for to take some profit, and that we may see a short-term pullback on the horizon. So moving on to our thesis for today. So obviously maintaining above the 5600 plus GEX level in a call-dominated positive gamma environment is going to be important. For the open, we see a COTMC up there on all expiries at 5679. I've outlined the 5650 level up here. That's really going to be an important area to get above. If we see some sort of stalling into that 5640, 5650, we could see some sort of choppiness or a pullback. And then to the downside, we've marked the 5500 level. Obviously, P-Trans down here at 5550, but within the overall drunken sailor range that we went over on the web app, definitely could be a little bit more volatile, as our expected move is extremely high today. So I guess the takeaway for traders today is 5600, need to stay above that to maintain bullishness. Any pullback down towards the 5550 level that maintains a positive slopes on the volume command, as well as the market trend model, is an opportunity to get involved to the upside. If we do get below the 5500 level, or even the 0GEX 5525, we'd look for some more cautionary, possibly a little bit more risk off, as we'd probably see the market trend model start to roll over also, as well as the vol-M slopes be in a negative fashion. So that's our takeaway for today. Hopefully that helps everybody. Let's make it a great day, and we'll be in the Discord in a few minutes. Thanks.